Thanks for staying with us here on The Pulse. This afternoon, think tank IMANI says a forensic risk assessment of Ghana's gold for oil program has revealed staggering fiscal leakages, systemic fraud and governance failures, sparking fierce calls from IMANI Africa and a coalition of oversight institutions for urgent prosecution and recovery of stolen revenues. According to IMANI, the multinational review, drawing data from the National Petroleum Authority, Boston Customs, exposed a pattern of opacity, preferential access, and structural loopholes that enabled massive revenue losses. On the gold side of the program, investigators found there were no contracts between the Bank of Ghana and the Precious Minerals Marketing Company, a lapse that allowed weak pricing controls and discretionary exchange rate practices and mandatory delivery quotas that encourage smuggling. Well, joining me in the studio is a key member of our research desk, Caleb Zublim, just joined us to break down the key findings. Caleb, what exactly are their concerns based on this report?
Okay, so according to IMANI, they got data from the NPA, costs, and then some of the fiscal authorities. And they found that some of the fiscal slippages that happened in the Gold for Oil program were somewhat intentional. So according to findings from IMANI, the system was designed in a way that it would be very difficult for the authorities to trace back where some payments were made and then where some money went to. And this was intentional. It was not an oversight or some breaches. It was intentional for people to try and maneuver the system and take advantage of it. And just for recap, the Gold for Oil program came in 2023, where because of the depreciating cedi and the high prices of crude on the market because of the the Ukraine war, the Ukraine-Russia war, prices of petroleum products in Ghana were very high. So the government at the time came in with a Gold for Oil program where they get gold from small-scale miners through PMMC, which is now Gold Board. They buy the gold from small-scale miners. They give it to the BOG. The BOG then goes to the market and either swaps it directly for oil or sells it and then uses the forex to buy oil and bring it to Ghana. So now, according to IMANI, the first thing they found was there was no agreement between the BOG, who gets the gold from PMMC. So BOG and PMMC, there was no formal contract. And prior to this, the Auditor General actually flagged this some few years ago that there was no proper contract between BOG and PMMC. So they should do the BOG should take steps to come and implement a contract, and the BOG said they would do that. But according to IMANI's findings, there was still no contract. And because there was no contract, there's no accountability, and it's very hard to trace where some payments went to. Additionally, they also said that some companies that use, because when BOG gets the gold, they give the gold to a gold broker outside the country, and that person goes to look for the oil for us. Now, according to the findings from IMANI, the gold brokers, some of them, the identities are not known, and sometimes the companies used to trade the oil and gold, and they have questionable ownership, some leading to some countries in the Cayman Islands and all of that. So that's a major problem identified by IMANI. Also, according to IMANI, the fuel that was brought into the country had 7.5 billion in tax exemptions, but according to their analysis, 7.2 billion has been lost to the state because of some poor reconciliation. And also, there were, because Boss was the only player allowed to bring in the oil and sell it, that undue influence Boss had was an avenue for, some slippages to occur. If you can go to the next slide. So, according to IMANI, these are the, and also lack of opacity, which I mentioned earlier, because some of the traders, they use the companies, the owners of these companies, some were shell companies. So it's very difficult to trace back who was actually getting the fuel for us, who paid, who some payments were made to, who owns these companies and all of that. So IMANI is asking for IMANI is asking for a forensic audit into the entire Gold for Oil program. And we know the BOG has said they lost 2 billion Ghana cedis for the overall cost of the Gold for Oil program from 2023 and 2024. They lost about 2 billion Ghana cedis. But according to IMANI, according to the BOG, this was just forex losses. But IMANI said there's more to it and then more investigation needs to be done. And also they say there was a breach of fiduciary duties where we entrusted officials to implement a policy that's supposed to support the country, but then they intentionally made the entire process opaque so that they can benefit from it.
Interesting. Thank you so much, Caleb, for that update. Well, join me now on Zoom as we explore this further here on The Pulse as Senior Research Associate at IMANI Africa. I'm Profi Ajiman. Thank you so much for your time here on The Pulse. We're just going through the key findings here, and it's quite interesting, some of the key things that you raise in this statement you have put out. Let's take it step by step. First of all, the part where we are getting to find out that there was no official contract between BOG and its allies. Walk us through the procedure and why you think this is indeed flawed.
Okay, thank you very much, Madam, and hello to your listeners. Good afternoon. That was a brilliant opening by your colleague. I think he sums up key points that we raised in our report. Now, let me just walk you through what we found, because I mean, when you paint a holistic picture, it will be easy for your viewership and listeners to understand. Now, when you look at what happened, IMANI basically categorizes our findings into the governance issues that we found. Okay, and I'll tackle that, and then also that the high risk corporate actors which this program sort of enabled, which put the country at risk. And then most importantly, we look at the revenue leakage that occurred, just because we feel that BOS had a huge role to play in the unfolding of these events. Now, back to your question, when you lack that foundational contract over this very important program that the government sought to pursue, then it really begs the question what the intent of this was in the first place. Now, what this contributed to a number of things, and I'll walk you through them. Now, the lack of governance made it possible that there were weak pricing controls. You know, the London Bullion Market Association, which sets the gold price every day, right? They are the go-to standard for what gold pricing is. And in this instance, there was inconsistent application of the LBMA pricing and the lack of independent assay. Assay is somebody who's an accredited independent body, a neutral party who verifies the weight of the gold sample that you have. All these were missing in the gold program, in the G4O program, which really is at the core of everything that we've learned over the past couple of months. Now, not only were there weak pricing controls, but also, as referred to by your colleague, there were discretionary forex practices. Now, the Bank of Ghana applied discretionary exchange rates, okay, and this created opportunities for arbitrage and hidden value transfer. And arbitrage is when someone buys something in one market at a low price and quickly sells it in another market at a very high price to make a risk-free profit from the price difference. So under the gold G4O program, the Bank of Ghana was effectively both a buyer of gold in cedis and a payer for fuel imports, okay? Because there's no single official exchange rate at which gold is converted into dollars for oil, the BOG can choose a discretionary exchange rate. For example, valuing the CD differently from the prevailing interbank forex bureau rate at any day, okay? So this gave the central bank flexibility to manage its books, but also it also opened up the door to arbitrage, like I mentioned. Traders or intermediaries can then exploit the gap between BOG's rate and the real market rate by buying gold or fuel at one rate and selling at another. Over time, these gaps can result in hidden value transfers, where some actors capture extra profit at the state's expense. And that's what we saw in our findings.
And it's quite interesting. Another key thing I see in your findings is that you're concerned that the whole process enabled revenue leakages, which is heard from the former MD for BOST. On our midday bulletin on Joy 99.7 FM, defend the gold for oil deal, telling us that it actually inured to the benefit of government, enabling government to rake in revenue. That's according to their internal audit. But here you are telling us that there was lawful exemptions at import stages, but there was no downstream tracking, and this actually affected the revenue of BOST. Tell us more about this finding.
This happens when fuel imported under the program is legally given tax or duty exemptions at the port, and to make it cheaper. But there's no proper system to follow up once the fuel moves into the market.
Okay.
These exemptions are supposed, let me finish. These exemptions are supposed to be temporary or conditional. Okay. For example, the tax is.
Okay. I seem to be losing you, but I'll come back to you as we reconnect the lines. Let me take you back to my earlier conversation. I was engaging the Senior Research Associate of IMANI Africa, and Prof. Agyemang. We appreciate your patience throughout the cut in transmission and us taking you to that news conference that Sam George was having. But then if you just tune in, we're just going through some of the key findings. IMANI Africa raising concerns about Ghana's gold for oil deal. It was once touted as the savior of the economy, but that is far from what we're seeing based on this report. And I'm just coming back to you, Mr. Agyemang, as we just look at some of the key findings in this report. You were just touching on the point of how you uncovered revenue leakages when it comes to the petroleum sector. Tell me more about that.
The point we're discussing, I wanted to touch on the exemptions bit.
Okay.
I don't know if I could.
You can quickly.
Yeah, sure. Right, because that's where we got to.
Okay.
So we found that there were unchecked exemptions, and this happens when fuel imported under the Gold for Oil program is legally given tax or duty exemptions at the port to make it cheaper. But there's no proper system to follow up once the fuel moves into the market. Those exemptions are supposed to be temporary. But what we found was that there was no downstream tracking of those deferred taxes. And so they never got collected. In effect, what should have been a postponed tax payment quietly became a permanent loss of revenue to the state. Okay, so that coupled with leakages also made the whole program run aground, and we were not very surprised that the current government had to curtail the program. You touched on revenue leakages, and I wanted to make a point in connection with BOST and the role that BOST played. Now, BOST's control over the G4O cargoes amplified serious systemic risk and created opportunities for diversion outside the official tax net. So BOST was put in charge of almost all the gold for oil cargoes, meaning it handled buying, shipping, storing, allocating the fuel. Because just one organization like BOST had such a dominant role, but weak independent oversight, it became easier for fuel to be moved, relabeled, or sold off outside the normal tax and customs channels. So the concentration of control within the ambit of BOST amplified the risk of mistakes and manipulation. If records were poor or monitoring was weak, large volumes of fuel could be diverted and underreported before tax were applied, costing the state revenue and making it harder for us to see where the losses were occurring. So these are some of the structural findings that we found during.
I can see a lot of due diligence concerns you raise in your report still, where you cite that all international suppliers selected for the program were found to have serious due diligence concerns. What are these concerns really?
So, all international suppliers for this program were either found to have some red flags in terms of their connection to sanction-sensitive trading areas in the globe and money laundering networks as well. So ideally, the program failed to actually vet all the international partners that it had engaged with. And indeed, in some of the findings, you find that there were local representatives who we believe, and of course, the investigation to be carried out, hopefully by the OSP, and we've also detailed some of the findings to the GRA and the entire government system, we'll find that there were people who were fronting for these international partners, and due diligence in terms of their ownership of those companies were not really given when they were engaged. So these are some of the things we found.
And another serious recommendation you're making in your report is that you're pushing for forensic audits, a comprehensive forensic audit. What other key recommendations are you making?
So beyond the comprehensive forensic audit, because we believe that we've carried our investigations, we are very sure of the findings that we have, but of course it has to go through the mill of the law. So we've supplied all the details to the appropriate authorities. Beyond that, we are hoping that the government can initiate some kind of a clawback mechanism or class prosecutions. So under the Ghanaian law, a retroactive tax assessment is when the GRA, for instance, or the Commissioner General issues a tax assessment that is demanding for tax owed for a past period, not just the current or future periods as we are used to normally. But this will happen when the GRA is aware of the fact that there have been certain misrepresentations. Maybe the legislation has changed, or there's some discovery of purposefully hiding the quantum of tax that one is supposed to pay from the GRA. And so the GRA is backed by Act 915 and also Act 1029 to actually do that retroactive tax assessment on all these companies that we are talking about.
Okay, and finally, just before I let you go, within just 30 seconds, you could tell me, have you officially petitioned the OSP and Siraj, key institutions, to look into your findings? That way you can see results.
There have been informal communication to the OSP and the GRA. They are aware of these findings. As to whether we are officially going to petition, we are still engaging with our partners, and we believe that will be carried out very soon.
Thank you so much for your time here on The Pulse. You're still watching The Pulse. After this quick turn, we have more in store for you. Please stay tuned.